I am really looking forward to talking with you soon. This short tutorial video will give us a little context for our call. As you may know, I've worked with thousands of people just like yourself to improve their professional performance and stewardship. Institutional money management. This is the bond market or fixed income securities. First thing we start with is some basic measurements. You think of good and bad and average. One of the things we find is there's a perception and then there's a reality and there's a gap between that. And that gap usually we can measure in basis points. Of course, as you know, a basis point is equal to 1% of 1%. And on $1 billion, that one basis point is equivalent to $100,000. So little improvements make a huge difference. Now, how do we quantify investment management? We look at behaviors and habits. We look at systems and methods. We want to first start and look at transparency, internal transparency, public transparency, and market transparency. Then reporting, is there segregation of duties? Risk management, identifying risk, measuring risk, mitigating risk, and then liquidity analysis, both static and dynamic. The other important thing we look at is the training. Do we have formal training? Do we have self-taught? Is it industry training like a Series 7 or Series 24? Is there seminars or conferences that somebody attends, and are they put on by brokers? Is there any coaching or mentorship? And then are there biases? So from past experience or from salespeople or brokers or politics, internal politics that you have bias from. And then considering the timing, are we buying low and selling high? So these are a couple, but we've got about 62 plus items that we will measure. And we go through and we measure these, and they could be a half a basis point all the way up to 5 basis points. And we weight these to look at how we might improve the investing. We look at our current situation and we look at what's optimal and try and figure out what the gap is that we can improve upon. Now, the question that we're always asking is, what kind of improvements over a period of time are we going to get? How many basis points improvements? It's so important to consider best practices when we're thinking about managing fixed income institutional investments. And we have to start with our policy or rules, look at our strategy, and then also consider market conditions. And when we're thinking about policy and rules, we've got to start with the objectives, whether they might be safety, liquidity, yield, or whatever they are. Limitations, prudence, compliance, reporting, transparency. And then the strategy, is it an active or a passive, barbell, matching, ladder, benchmark? And then is the market going up? Is it going down? Is it sideways? And we always got to consider that strategy with the market conditions, up, down, flat. Are we buying low? Are we selling high? The visibility of the market. What is the pricing and the timing? And then all of those lead to investment decisions. Now, we look at technology and what technology is needed, and we look at training and what training is needed to get these best practices. Now, for fun, let's compare and contrast what typical practices are when it comes to making investment decisions and how we're controlled and influenced on making these decisions. These are strong influencers on decision-making processes. The first one is we have our own worldview. Next, we get a lot of recommendations. And thirdly, we have some habits on how we do things. And these all affect our investment decisions. Our worldview, we have our own biases, we have our own background and our education, our training, our past experience. All of these things affect us. And the recommendations from salespeople, peers, from brokers, banks, seminars that we attend, advisors, and then a lot of people are in the habit of just chasing the highest yield, or they just replace investments as soon as they're called, or they're heavily into cash, or maybe they're going after the highest returns, or there's an investment type that they just like. They have to have that one. Well, the challenge is we face lower yields over a long term, and we have unknown risks when we go about doing it this way. How do we get to better informed decisions within our investment management process? One, we have to look at transparency. Two, we have to look at technology. And third, we have to look at training. Transparency is more about market conditions. Is the market going up, down, or sideways? What are some of the bond prices? What are our commissions? What are some of the fees that we pay? And the technology, reporting, our risk management, very important in technology. Our decision-making process, can technology help us there? And then our best practices and compliance. In training, we consider coaching and mentoring teachers. What kind of a system of training are we going to have? All of these things are going to help us make better informed decisions. And if you look at 25 basis points improvement on a $100 million portfolio, that equals to $250,000 per year, or $1.25 million over the next 5 years. Again, I look forward to talking to you soon. If you have any immediate needs, please call me at 636-579-9456.